You didn't choose this because you're passionate about this. You choose this because you saw a problem that needs a solution.
It is actually my passion.
Oh, really?
The public markets, $150 trillion market, and most people think it's very efficient, is actually the most inefficient market out there. So
Exactly.
it's really, really hard to turn around the nature of the business. But what's much easier is to transform the nature of the capital itself. What we're trying to do here is turn dead capital into performing capital.
You are not a DAP. You are a capital recycler. You distinguish yourselves away from
Correct,
here.
correct.
What's going on, guys? Hamid back at Take It or Leave It with hack seasons here in Abu Dhabi alongside Bitcoin Mina, Abu Dhabi Finance Week, Solana Breakpoint, F1 just passed, so much going on. Today I'm here with William. If you want to do a quick introduction, that's your camera there.
Yeah, thanks for having me here. I haven't been to Abu Dhabi in 10 years. The last time I came here, I spent 6 months here. It was complete desert, and now this place is huge and vibrant and so many people.
Right? I mean, people think Dubai grows so fast, but Abu Dhabi has scaled themselves up massively.
Yeah. It's incredible just how much change you can see in literally 10 years.
Right?
There's so many new places to go to, so much infrastructure being built. I mean, there's an incredible amount of conferences going out every single day.
Yeah.
It's just an incredible economy here.
Right. And then you see something like ADGM and Hub 71, what they're building in terms of like an incubator for businesses and capital to move. It's impressive, right?
Yeah, it's a huge success story. I mean, I've been watching it for quite a bit of time. And it's just incredible how much they've managed to accomplish in such a short period of time. My background, I'm originally from Sydney. I started my career at McKinsey, the big consulting house. They were the one that sent me to Abu Dhabi for a good 6 months.
Consulting gets such a bad rap.
Yeah. It was a interesting time. They sent me all around the world. I was actually stuck in a Australian coal mine once.
Really?
Yeah, for
I'll have to talk more about that.
Yeah. And then after McKinsey, I actually spent most of my career at a company called Oak Tree Capital, which is probably one of the most well-known special sits funds out there.
Okay.
And the company, what their focus is on is really just around buying companies that sometimes, because of different changes in market conditions or regulation or competition, effectively what happens is a bunch of them aren't really favored. Some of them might actually go into a bit of distress, right? And they actually need a bit of help, right? And so what we would do is we would go and find these companies that are effectively gems, go and invest into them, sometimes turn them around, sometimes fix them up, sort of like a doctor for companies. And then once they fix and healthy again, we then sell it off.
Yeah.
So that was what I spent most of my career doing. And then in the last, more recently, I've been very focused on building my own company called Altuva Group.
Okay.
And what we're trying to do at Altuva is really interesting. We are trying to build what we think will be a new asset class. We call it capital recycling. And what capital recycling is, it's the practice of turning capital that's undervalued and underperforming, trapped in the public markets, and then converting it into a very, very high performing asset, right? It's never been done before. It's going to be really, really interesting, but it makes a lot of sense because there's something like 10 to 15 trillion dollars of capital trading below value in the public markets today. And all of that capital, we think we can put it to much better use, whether that's in the form of Bitcoin or other forms of capital.
So you're using your experience essentially acquiring fixer-uppers in the past and transitioning that into what is now Altuva, right?
Yeah, so to some extent. Now, I would say general distress or turnaround as a strategy is incredibly hard, right? When a company is declining, on the path of declining, right? And it's usually because of a lot of different factors, right? Whether that's regulation has changed, the P&L is no longer profitable, there's a business model that no longer works, so they've got competition that just intensifies and they struggle to basically compete. but it's really hard to go and turn around a business, right? There's an incredible amount of work just to like, if it's going minus 20, right, you might have to go and spend 4 or 5 years of your life.
Yeah.
And in a good case, it might become flat,
Yeah.
right? And in a bad case, right, you know, the CEO disappears, or you get hit with some random thing that you can't underwrite. It's just incredibly difficult to actually go and do that type of investing.
Yeah.
Now, what we are doing here is something far more fundamentally different, right?
Okay.
Which is, to me, it's really, really hard to turn around the nature of the business. But what's much easier is to actually transform the nature of the capital itself, right? And so our business is, we will buy capital that's trading, or businesses that are trading at a discount. Once we buy them, we will then monetize all the assets that sit on the balance sheet, salvage that, and then go and convert that into Bitcoin, where we think it's going to earn a much better return with much less risk over the course of the next 5 to 10 years.
So in layman's, what we're talking about is a DAT, right? We're talking about a digital asset treasury for the retail side, but the story behind it is much more intricate and methodical.
Yeah, so there are elements of a DAT, right? Which is, I think, a DAT has proved out 2 things to me, right? Number one, crypto is very cyclical. You have to hold it in a long-term vehicle that can actually withstand the cyclicality. Unlike an LPGP structure where you're forced to return capital immediately to your shareholders, right? You'll be in a bad day, right? The second one is that in a public structure, right, public vehicle, you can actually take advantage of the fact that your stock trades at a premium to NAV to go and increase NAV per share. Right? Now, that's something that never had been done in history of finance, right? Until the DATs came. Now, the problem with the DAT model is if you don't get the flywheel up and spinning, right, you have no flywheel, you can't get it running, and you're effectively stuck there, right? Trading at effectively 1 times. And we've seen that in the last few weeks. And what's probably going to happen with a lot of these companies is that they effectively just sit there and just trade off for quite a bit of time. And basically, over time, the value erodes slowly. And that's very similar, by the way, to the de-SPAC market, the Australian mining boom market. It always happens the same way. Now, the great thing about our business model is, regardless of where we have in terms of a premium ourselves, right, we are always going to buy companies that are trading below us from a NAV perspective, right? That's always going to be accretive to us. And so irrespective of where the broader market is and our own premium, we can continue to accrue value no matter where the market is. And so it's actually, it uses a DAT structure, but it's a far more fundamental business, which is, what we're trying to do here is effectively be the capital recycler of the public market. Turn dead capital and underperforming capital into performing capital.
It's a super interesting way to spin it, right? Because you guys are essentially exactly that, is recycling, repurposing that, and putting it into a much, I guess, stronger performing asset, right? In Bitcoin. So talk to me about the current DAT landscape today then. How do you sort of position yourselves to be sort of, I won't say above it, but to not be grouped in with the other, well, right now, what is dead weight, essentially? That's trading below NAV or trading at a 1x NAV.
Yeah, so there's about 100 DATs that launched in the last 8 months. There was about $10 billion of capital raised across those 100 DATs. I would say for the majority of them, they tend to be some form of crypto that's sitting on the balance sheet, and where the business plan is effectively to get the flywheel up and spinning, right? If its flywheel comes up and it can spin, you can actually create some form of value for some players.
Of course.
Now, the main points of differentiation for a lot of the DATs is, number one, either instead of Bitcoin, you're using some other token. And I think what we've seen is that there's a lot of different tokens they're using now, and effectively going down the risk curve in terms of more and more smaller tokens that are more liquid.
Top 20, top 30.
Exactly.
Now we're touching below 100.
They got to the top 20, yeah. The second way they tend to differentiate is they tend to try to increase their token per share, right? Usually through yield. Now, my view on a yield is sort of like, it's just like stocks, right? With stocks, you can actually choose to pay out a dividend, and increase the supply effectively of your stock money, or you can actually just hold it within the company and then you will actually see a capital increase.
Yeah.
And so I don't think that's, to me, a real valid way to increase NAV per share.
Yeah.
Because you're effectively taking from the capital value or capital growth of the underlying token. And even if it did work out, right, a lot of these yields tend to be, I would say on average 2 to 8%, right? Which is,
Especially
I would say,
Bitcoins, right?
yeah, Bitcoin, if you go to riskier loans, you're maybe generating 8% yield.
Yeah.
And in the context of a company that's trying to outperform the market and try trading, call it slightly below NAV, that's not enough of an increase to get a
I
premium.
mean, T-bills
Right.
are what, 8%?
T-bills are 4 or 5%, right? You're talking about 3% on top of that, assuming Bitcoin stays flat.
Exactly.
Now, the great thing about our business model is we actually operate on unit economics that are much more accretive than them.
Yeah.
We are generally buying companies trading at a discount to NAV. We're buying them using stock that trades at a premium to NAV. And in every investment that we make, we think we'll generate somewhere between, call it 3 to 5%, 3 to 5 times MOIC, money multiple,
Okay.
within 6 to 9 months.
To me.
Which from an IRR perspective is something like 10,000%.
Wow.
Yeah.
And when it comes to the acquisition strategy, right? Is it global, or are you guys focused on a specific market? What really stands out from an acquisition
Yeah.
standpoint,
So
other than the net asset value?
the great thing about our strategy is we're not buying business models.
Yeah.
We're just buying a form of capital.
Yeah,
Right.
exactly.
And so every capital is effectively the same to us. And so our acquisition target landscape is global. We can do all types of industries. There's obviously a lot of capital trading below value in all types of industries. Doesn't matter which industry you're looking at. But some industries that are very interesting to us are, for example, biotech companies, real estate, industrials, real assets. From a geography perspective, there's a lot of geos that are also really interesting as well.
Yeah.
Take, for example, Japan. 40% of Japan stocks now trade below book. And so it's any company globally, right? As long as we think we can realize some value from it, and where we can actually unlock value from arbitraging that inefficiency.
Yeah. And I think coming back to, I guess, the inefficiency point, and I know you previously mentioned the global distressed asset market being upwards of $1 trillion, right? How much did you say it was?
$10 trillion.
$10 trillion, right? How many more Altuvas do we need before we can actually consolidate all of this into?
Yeah, well, it's really interesting. If you look at any public market, right, or any market in general, doesn't matter if you're talking about stock trading or the groceries, right, or eBay, right, any market. If there's an inefficiency, usually it's arbitraged away
100%.
very, very
Yeah,
quickly.
very
right?
quickly. You see it in crypto all the time.
Yeah, absolutely. But what's really interesting is that the public markets, $150 trillion market,
Yeah.
and most people think it's very efficient, is actually the most inefficient market out there.
It's insane.
Right? Because there's a huge amount of capital,
Yeah.
especially with the rise of index funds in the last 10 years, that's just sitting there floating, underperforming, and no one really looks at it, especially sub 300 mil market cap. And not only is it not being arbitraged away, but this capital, it's just effectively sitting there for someone to actually do something with it.
Exactly.
So that's what we want to do. I think in terms of, it's a huge, huge mission.
Yeah.
We think capital recycling will be the next big asset class. And I think in 5 years' time, hopefully we'll be in an asset capital recycling conference instead of
The DAT
conference.
asset. Okay.
Yeah, huge market. I think there's going to be a lot of players in there.
Yeah.
We are going to be the first and the most dominant player, but the opportunity set is huge. So there's a lot of work to do in the years ahead.
So let's bring it back to you on a personal level, right? I mean, you didn't choose this because you're passionate about this. You choose this because you saw a problem that needs a solution, right? Like, what makes you the right person to take something like this forward?
Yeah, so I think what's really interesting about this problem and the solution that we've come through is that it sort of involves, I would say, different parts of different disciplines. Our business model involves a bit of special sits, a bit of activism, a bit of PE roll-ups, a bit of crypto, a bit of public equity structures.
Yeah.
And part of the reason it hasn't been done before is because you need someone to go and combine all these disciplines into one house.
Yeah.
What's really interesting about my experience is that, I have experience in special sits, in distress, in crypto, merging very, very risk-averse people or discipline with a very risk-on discipline and putting it into one house. And it is actually my passion, right?
Oh, really?
Because historically, the reason I'm spending so much time on this is because historically, I have seen many, many times companies destroy or capital being mismanaged or put to incorrect uses.
Yeah.
And I've seen the potential and I know firsthand how hard it is to run a business.
Yeah.
Generally, it's very, very hard, right? And so I think the way I view it is that this is a mission where we can salvage a lot of capital, help a lot of shareholders, help the public markets, and replace the public markets with better performing capital.
Should be a shrine to Altuva where all the shareholders come and they're like, thank you for saving my money.
Eventually, for sure.
So, take it or leave it, right? DATs.
In the current format, I would leave it.
Okay.
But if it can change and there's a better business model, I think it's an absolute take it.
Yeah. And you are not a DAT. You are a capital recycler.
Correct.
You distinguish yourselves away from
correct. We are something that's far more fundamental. That we think is a new asset class. We think it's going to be called, or we're defining it as capital recycling.
Yeah.
And we think it's the next asset class of the next 10 years.
Beautiful. Thank you so much, William. Appreciate having you on.